Good morning. I'm Michael McKee from Bloomberg News. I'm the international economics and policy correspondent, and today is our annual or our monthly look. Annual look would be kind of hard. Monthly look at the Michigan consumer sentiment numbers, which unfortunately were not very good. It's a nice day, but it is not lifting the mood of anybody at this point. The headline number comes in at 67.4, down from 77.2. The current conditions number 68.8 from 79, and expectations 66.5 from 76.0. Joining me, as always, Joanne Hsu, Director of Surveys for the University of Michigan. And the obvious question, Joanne, is what the heck happened?
Well, a lot of bad things happened this month from the perspective of consumers, at least. Their inflation expectations went up, so they are expecting inflation to pick up a bit more in the year ahead and as well as 5 years out. They're expecting unemployment to get worse. They're not expecting any relief from high interest rates either. So really, consumers while they had been reserving judgment over the course of 2024. What they're seeing now, it does not look good for them.
Is there anything in particular that drives this month more than others? Because gas prices have been going up for a while. The Mideast war has been going on for a while. The Ukraine war has been going on for years. And we haven't seen a lot of movement in the presidential race. So is there something that happened in the last 15, 20 days that really made people more unhappy?
I think really the main thing is that people are starting to see some weakness, signs of weakness in labor markets. And this is consistent with the jobs report that we got pretty recently that came in softer than people had expected. So it's not that I think consumers are necessarily watching the jobs report, but I think they're responding to the same types of information that's feeding into that. Labor market expectations have been really strong for the last 2 years. And this was quite actually a large decline in labor market expectations, about twice as large as the normal month-to-month change in unemployment expectations.
Let's just clarify how the questions are asked. Are you asking people how they feel compared with last month, or just how they feel in general?
For the current conditions, we are asking a question about how people's personal finances are relative to a year ago. And we're also asking about current buying conditions for durables. So there's no reference point, past or future, for that. And the other three questions in our sentiment index are all expectations questions. So two questions looking at a year ahead and one question looking 5 years out.
So at this point, it doesn't necessarily correlate to what has happened in the past. In other words, people may have been very depressed by the pandemic, but we can't say that this is the same kind of numbers that we were seeing.
Well, yeah, I mean, I think when it comes to the pandemic, we actually have a lot of people spontaneously mentioning COVID still, and usually it's in terms of trying to compare their current situation to what it looked like pre-COVID. We don't prime them to do that in any of our questions. This is consumers spontaneously telling us that. I mean, we do have a few questions, like I said, how do your personal finances compare to a year ago? And yet consumers will still make references to pre-COVID.